This is the MTPredictor weekly market update for October 7th. Before I get to the charts here, just to talk about where we are again. Currently, Monday or tomorrow will be a bank and a bond holiday. Stocks will be open, futures will be open, but obviously no news will be released, so expect it to be a kind of a slow day. Things will pick up on Tuesday. All the way through Friday, we've got economic data coming out, including the PPI and CPI. So maybe a slow start to the week, and then heading into after next week, we've got we'll be heading into the beginning of earnings season, and so we've seen the market kind of rally into, as we expected, as it has a tendency to do, rally into the beginning of earnings season. Now we know QE3 is getting ready to be unleashed, and one thing I thought would be interesting to show before we get into the charts again, and this is courtesy of Cycle Charts. This is the you can read the total currency supply, that's revolving credit plus base money. So we know money is only created in our debt-based economy when debt is created. So when you take out a loan, a mortgage or a car loan or your credit cards, these things create money out of thin air, if you will, while the money is destroyed when those debts are paid off. So when you pay off a loan, that money is destroyed. It causes the money supply to contract, if you will. Well, you can see, the red line here is basically the revolving credit. And you can see these contractions in here from 2008, 2009, and 2010, basically all coinciding with our QE1, QE2. And again, we're getting currently about $50 billion a month of credit contraction. And basically that's deflation. And we know that the Fed is trying to fight that. In fact, QE3, he's trying to fight that to the tune of $40 billion a month in new money creation, and it's trying to flatten this out. We haven't seen these credit contractions since the Great Depression, right? And this is why the Fed is so afraid of this the deflation and trying to inflate the money supply, and that's why he's not so concerned about inflation, because he'd rather see a little inflation than these credit contractions. And so this is basically the QE3 or QE infinity, whatever you want to call it. It won't be until infinity, I guess, because it'll come to an end at some point, for better or for worse. But that's kind of what's going on in the background here, with the Fed trying to fight that deflation, that credit contraction. And we can see here's our daily S&P, the current contract for December. And last week we had these little trend lines drawn here, and we said let's see if this area holds, as we expect they might rally into as we get into earnings season. All right, the problem now that we have, and this is a similar situation to what we've seen prior. All right, here's again our S&P. Let's look at our major top here, wave 5 top. Typically when you get wave 5 up, you get a correction back to the wave 4 decision point support area here. Again, we saw the trend line support here. We've gotten a rally, but the danger now is similar to what we had before, is this: if they cannot take out this swing high here. All right, if I put the Elliott waves on, in fact, let me just clear this off first, and let me put the Elliott wave on this swing high. If they cannot take this high out, then we could potentially end up with a wave 1 here, wave 2, and again the big wave 3 move to the downside. All right, very similar to what we saw back here. If you remember, here was our this is the ES. I think it shows better in the Dow, but this was again another top Oh, this is the daily chart, that's why. Okay, well, I'm looking at the daily chart, but okay, we had a top here which was a wave 5 up on the weekly chart. This pullback became a wave 1, and then we actually had it was not quite an ABC. It was actually, if you look at the minor pattern here, it ended up being 1, 2, 3 pattern, but then we got the big move down. If we look on the weekly chart here and go back, you see here's that same top, and it was a wave 5. Right, instead of getting the original or initial correction back to the wave 4 DP, here on this leg we got a reversal back up, but again it was in this wave 2 or B. We look at this as a potential wave 2 because of the fact that this was a major wave 5 and a decision point top here, and that's when we projected wave 3 down, and I said at the time, if they can't take this high out over here, then the danger is we're going to see that, you know, that wave 3 down here. And you can see it went to typical, just about to the maximum wave 3 target to the downside there. Right before we began our move back up. And so here we are on the weekly chart in our 5 wave pattern up again. And so we've got to watch this. And the reason is now, similar to what we had before, here's your Dow. You see the Dow here did, in fact we've got a 5 waver here, right? The Dow sold off and it came back up, and Dow has taken out that previous high, right? The S&P hasn't. And the same, very similar to what we had last time when the Dow took out its prior high there, significant high, and the S&P failed to, and that's when we got a, this big correction here. So we want to keep an eye on this, especially after maybe earnings season gets underway. If we see that, if we see even, go back to the daily here, even this wave 2, even if we project just, if we look at it as an ABC, we can project down wave C. Okay, it would take us to the bottom of the, bottom trend line here. And we'll just project wave 3 down now. We'll see if this does unfold as some type of pattern. Maybe get a clearer picture. Your wave 3 would put you down, the typical wave 3 down around 1400 in the current S&P contract. So just something to be aware of, that the Dow has taken out its prior high, the S&P has not. And as we saw back here, same situation. Once this was the area where the Dow had made a new high, the S&P failed, and that was the danger, is this thing was going to roll over and correct. Alright, so keep an eye on that. Let me bring in, we'll look at gold and silver here. Let me expand this a bit. So you can see I've got the analysis. We had our decision point here off of this last swing. That's the resistance area that we came up into. We hadn't got much of a pullback here. The actual wave 4 support area was down close around 32. So a few things happening here. We're in this resistance area. The actual wave 5, minimum wave 5 target is up a little higher, but you can see the software is telling you if this is going to be wave 4, we're heading into wave 5. Here's the actual wave 5 resistance, sitting right around 3640 area. Right, you've got the STF coming off the strength band. You get the volume pulling back here a bit as well, and so we're going to have to watch this. we've got our, here's our golden cross, as they call it. This is a 50 period moving average crossing above the 200 period. Alright, so if they can't make it through this area, we've been consolidating in this area. They made another run into it, took out the prior high, at least traded above it, but closed back within the decision point area. So we have not gotten a close above this area yet. And so there may be an opportunity. We'll see if that volume continues to shrink. If they do pull, maybe we get a pullback at least back into this 32 area, and maybe back into this 50 period, just below 32, around 31. Well, currently around 31.25. We'll have to see. So those that are long, again, we had, at least I had, and I know some others had as well, been purchasing silver based on the break here out of the triangle. Right. Once we got a close above this triangle here, and that high got taken out, we're purchasing silver. You may be long this, as a swing trade. If so, you can use the ATR trailing stop at this point to manage that, and see if it can take out this area, get into the wave 5, and then kind of go from there. Reason it could is the fact that gold has not reached its major resistance yet. If we look at the gold chart, here's the last major swing here on the daily chart, and you see where that resistance comes in around 1832. It's close to 1833, we'll call it. So obviously not there yet. This strength is just coming off the STF here. Volume starting to pull back. So we'll watch this. It's possible, again, there's your golden cross, 50 period above the 200 period on the daily here. So we'll see if they can't make it through this area, if we do begin to get a pullback here, maybe even back to the 50 period. It's, that's possible. We'll see. All right, here's oil. Again, the daily chart on oil, we had the sell signal there, achieved the target, had a little bounce there on Friday, back up in that 91.71 area. But on the weekly chart here, again, this is the area, since the big sell-off here, we've been in this, basically this $80 to $110 channel. And so watch those areas for support and resistance. And if they break one way or the other out of those areas, then maybe get the next move in oil. And we'll see if they continue to use the $80 area. You can see here's your $80 area, support and support. I'll support all in here. And then just about that 110 area up here. So when we reach that 110 area, immediately got smacked down here. And then all back in this area. So we'll continue to watch that $80 to $110 channel that oil's been in for quite some time on this weekly chart, and look for breaks one way or the other. Obviously a good sized channel, but it will be significant if it does break out of that area one way or the other. So we'll keep an eye on that. And then we'll bring in the Euro US dollar here. Again, we had the 5-wave pattern down, the initial correction back to the wave 4 DP as anticipated, played out. If you were long this, obviously you were trailing with the trailing stop based on the STF strength there. You're taken out on that now. We'll see where this heads. If they take this swing high out, chances are we'll see this DP up here, which was the DP off of the top of wave 1, again, which is the tendency once the wave 4 decision point area gets taken out to the upside, the tendency is they're going to erase the whole 5-wave pattern sequence to the upside. All right, so as this found some support and began to rally here last week, we look at the dollar index. You see that just began to sell off again a bit. Again, it came down to this major support area here, rallied off of that, and you can see the pattern here. We've got a nice 3 into 4. We can project wave 5 down here, and we'll see if the dollar continues to sell off. And you see the minimum wave 5 target around 78 in the dollar there. And of course, if this does get into this target here, we should see the euro heading for that and then probably achieving that second level DP off of the top of wave 1 there. So we'll keep our eye on that. And we'll leave it there. Again, expect maybe tomorrow a slow day based on the fact that the banks will be closed and the bonds will be closed. Stocks, again, futures will be open, but no news. Things will pick up on Tuesday, heading in this week, all the way through Friday. We've got data on Friday as well. And then next week we begin earnings season. So that should certainly get markets moving. And a lot of things coming into play, a lot of things going on in Europe. We didn't get to, but keep your eye on that situation there. I think Draghi speaks on Tuesday as well, so from the ECB. So anyway, we'll leave it there and pick up next week and see what's going on. All right, have a great trading week, everyone.